Good afternoon, everybody. Great to have you here for another one of our price action trading guide sessions today. And here we are up to session 30. We are, ladies and gentlemen, on how to combine price action and intraday trading. Great to see so many of you here. Fabulous to understand those of you joining us here today on the live session. How many of you already combine price action and intraday trading? It'd be great to know what, if any, experience you have in that arena, so to speak. I do recognise that we always have a broad range of experience of people joining us. So it might be some of you here joining us at the very start of your trading journey, in which case, you are very, very welcome. You might still be trying to get to grips with understanding what price action and intraday and how they go together. Hopefully I'll be able to share that with you. And also we have, people who have got advanced trading skills. Great to have here, and hopefully it'll be something that you can take away and utilize to sort of move forward your own trading. We always recognize as well that we have a truly international audience who join us for our sessions, wherever you are in the world. Myself and all the team here at Admirals, we hope you're well, hope you're having a good year, and hope you're enjoying these rather eventful and interesting markets that we find ourselves in. So, remember, here we are, Admirals, a FX and CFD broker with a global presence and local support, licensed and regulated across a wide range of regulatory environments, providing a competitive spreads on the most popular trading products and giving you the opportunity to engage with markets utilizing both the MT4 and MT5 trading platforms. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. So for our session today, not unsurprisingly, we're going to talk about what is price action, but we'll also do a little bit on understanding, the importance of price action, what is important to know, when it comes to intraday trading. So there'll be a little bit of theory, then we'll have a little look at a couple of ways you can turn that into useful information for yourself, using that to just edge your way towards creating an intraday trading plan. And then we've got lots to cover today, but hopefully we'll have a couple of minutes at the end just to take a little look at the live market so we can sort of see what I'm talking about in this session, how it's playing out on the live market in front of you. For those who don't know me, my name's Paul. Traded for many, many years, traded for funds, traded for clients. Primarily, I like to focus FX, indices, commodities, which will be one of the focuses of our session today. And for my longer term trading, I tend to be a trend trader. And for my shorter intraday trading, I tend to be a reversal trader, a mean reversion, which I'm going to talk to you about today. So there's lots of experience there that I'll be able to share with you, from my own trading, and hopefully that will help you get a bit of a better grasp on understanding the sort of the vagaries of intraday markets. So, as always, we start with just to recognize that these sessions are all about price action guide, all right, and the idea being that it's sometimes easy for beginners traders to be intimidated by the amount of knowledge required to be able to analyze markets. However, with a little bit of education, a little bit of understanding of price action, and how candlesticks are formed and what they are telling us, then it becomes easier to analyze and understand markets. And so each of these Wednesday sessions is just hopefully trying to build on each one, the preceding one, just to give you a little bit more understanding and insight about price action, but also how it plays out in sort of bigger elements of trading financial markets. So there's always plenty for us to cover, always lots for us to talk about. But reality is that when we're looking at price action trading, it is just the basic means of using price movement over time, and it's popular with both retail and institutional traders. And most of our sessions we have focused on sort of swing trading, so price action from the 4-hour, daily, weekly, etc. However, good price action works across all time frames, as we're about to talk about and show here today. As I say to many traders, it's like learning a new language. You're invariably just taking on board learning any new language, whether it be French, German, or even learning music, right? The more you practice at it, the more it becomes eligible or legible to you, the more you're able to understand what's going on, the more useful it is. And I think if you can understand price action and read it, well, then it gives you a really great basic basic sort of understanding that you can take and utilize, as I say, across all time frames and all instruments. And I think that's really key for new traders. So we've covered quite a lot already, okay, and there's a long list there. And the good thing about these sessions is that they're recorded and they are on the Admirals YouTube channel. Maybe you're watching this later on demand on the YouTube channel as it is, but if you're not, okay, if you're not subscribed to the Admirals channel, then be sure to do so, because you'll be able to have access to all of these previous sessions and also all the other content that my colleagues are creating as well. And when it comes to a price action, what we've tried to do is try to mix up the hard skills, okay, that you need. So identifying things like setups, all right, which everybody loves, things like engulfing candles, star formations, pin bar formations, inside bars, etc. But also with some of the soft skills that you need as you develop and evolve as a trader. So preparing yourself for opportunities in markets, having a trading plan, understanding the importance of routines and checklists, how you can basically plan for your session ahead. All of those things and many of the others in the session. When you're a new trader, you might not necessarily recognize the value to you, but I assure you, the longer you trade, the more you will realize how important they are to you. So trying to mix the hard and soft skills, all with basically just helping you become the best price action trader that you could be. And as part of that, what we talk about every week is about starting to, build a routine, build a checklist, especially for the new traders. Okay, making sure that you're getting the right habits and behaviors embedded into your trading style. And so what we talked about was, in previous sessions, is that whenever you open a chart, whenever you flip open your device, okay, and open up your MetaTrader, Admirals MetaTrader trading platform, what we want to be looking at, regardless of whether it's gold, whether it's oil, whether it's Bitcoin, whatever, first thing we do is we start drawing on levels of support and resistance, right? Start from the monthly, down to the weekly, down to the daily, okay? Draw them in those levels, all right, that, we can see that market reacts, because that becomes key for us later on. Because the next step is then we look, is there a trend in place? You hear me say it every week, good trend will leap off the chart to you. You don't need to force it. You don't need to push it. If you're feeling as if you're forcing it, it probably isn't a trend, and you might want to just give it a miss and go and look at something else. But if there is a trend, well, we're interested to see, well, how does price react at those key support and resistance levels? Maybe those key support and resistance levels are the horizontal ones you've drawn in. Maybe it's a trend line. Maybe it's a big round number, okay, a treble zero number, which we'll look at a little bit later on today. Maybe it's dynamic support and resistance, all right, which, is like the moving averages we covered a few sessions back. Seeing how price reacts at those particular levels is enormously useful to us as a trader. Because what we're looking for is step 4, which is looking for some of those price action triggers at those significant levels. So it might be the price action triggers we've talked about before, things like engulfing candles, pin bars, key reversals, inside bars, star formations. We're looking for them to give us a trigger, but we also need to be aware of step 5. Is it part of a bigger chart pattern? Okay, maybe it's a part of a big continuation pattern, or maybe you're trading just in front of the end of a reversal pattern. It's important just to take a step back sometimes, okay? Sometimes, when you're a new trader and you're very focused, okay, you can't see the wood for the trees. So what we want to be able to do is to understand, is it part of a bigger chart pattern? Because that actually might provide us with a tradable opportunity also. And what we said is we would look to focus on across asset classes to start with. So when it comes to FX, okay, which is next week's session, we're going to focus just purely on price action within FX. What we'll do is we'll look at the dollar index and then the 28 other major pairs, which is effectively the 8 majors and the cross currencies across within that. We look at some of the big major indices, all right, the American indices like S&P 500, Dow, Nasdaq, FTSE, okay, etc. Also commodities, all right, the major commodities like oil, gold, silver, you'll see people are always interested in. And then we also have some of the important equities. Some of the people like to trade those, some of those big American tech stocks, which that can provide some great moves. And I also appreciate there are also people who like to trade crypto. The good thing is that once you understand price action, you've got a good handle on it. You can literally look at any asset class in any time frame and utilize it as a basis, as a way to trade. So, let's talk about how we combine price action and intraday trading. These, this is what we're here today to look at. And as the slide says, lots of people are interested in whether they can trade markets on an intraday basis using price action. The question is, or rather the answer is, it is possible. It is very possible, but you need to be prepared. Okay, you need to be prepared for any type of trading, but when you're doing intraday trading, where things are likely to happen much faster, and what I would suggest is, my definition of intraday trading is, anything on the 60-minute chart and below. And as an intraday, so that could be on MetaTrader, that'll be 60-minute, 30-minute, 15-minute, 5-minute, 1-minute charts. And as an intraday, well, invariably what we're doing is we're not holding any positions overnight. All right, the position will be opened and closed within that, might be in that day, or it might be in that session, if maybe you trade the European session or the Asian session or the New York US session. We're all trading, but especially intraday trading, it is crucially important that you know when the relevant news announcements are being made. You may wish to trade about the news announcements, you may not, but it is important, crucially important to know when they are, because you don't want to get caught on the wrong side of it. And today's session, what we're going to do is we'll build upon previous price action tools and setups we've discussed in previous sessions, but look to combine them with knowledge of intraday markets. And to begin with, what we can start to do is it's time for us to start growing from just thinking as a trader, but actually thinking as some of the other operators in markets. And it's time for us to start thinking as as a dealer, or as more often these days and sort of called or termed as a market maker. We'll come back to that in a slide or two time. What I'm just saying is that from personal experience, I found that there are times of the year when, you may wish to prepare to focus on one particular asset class over the others when it comes to intraday trading. So you have the opportunity with Admirals to trade FX markets, equities, indices, fixed income, crypto markets. And sometimes it will be very clear about which is, the asset class of let's say, of choice at that particular time. Sometimes it'll be very clear. Other times, not so much. Okay, markets are always changing, they're always transition. Okay, they will always see where the sentiment, where the focus is. As I said, sometimes it'll be very clear. Other times, it's not. But with that in mind, today we'll mostly focus on FX pairs when it comes to intraday trading. But whatever I discuss and share with you is relevant to other asset classes as well. It's just most of my experience, okay, especially on the institutional side, was like as an FX intraday trader. So that's what I'm going to focus on, what I know and how I operate, and share that with you. But we are limited by time, and so I'm just going to share what I can, but it is relevant to all asset classes. So, we talked a little bit about a routine there, a couple of slides back, but, it is crucially important, okay, to have that little simple price action trading plan when you're intraday trading financial markets. As we said, a bit deeper, okay, make sure you have identified significant levels on the higher timeframes. Why? Because you don't want to be buying into resistance, right, or selling into support as a new trader, right? That's not what we want to do. Wait for price action triggers at significant levels. That's what we said a couple of slides ago. For new traders, I tend to say enter the trade on a break of the candle, which means the candle has to have completed. Very often people start to get a little bit excited on the intraday time frames, and they think it's a pin bar that's being created, and they get in early only to find that candle hasn't completed yet, and what they thought was a pin bar might just simply be a spinning top or something very different. It's always important, okay, managing risk. So we have no more than, risking 1% per trade. If you want to know more about risk management, there are slides there. Okay, there are the previous sessions. Be sure to check them out and watch them. And as a general rule, I normally say look to at least target 2 to 1 a reward to risk. At least have the trade have the possibility to make that, or perhaps might be the next significant level, which we'll look at in a moment's time. And as you will always hear me going on, be sure to keep good records of all your trades and review them. Review your trades at the end of the day, review your trades at the end of the week, at the end of the month, at the end of the quarter, because actually what you'll start to see is you'll start to see the trends in your own trading. You'll start to see which of the trades work well for you, which are the ones that are impulsive, sloppy, not really your particular type of trading, because what we want to be able to do is we want to rinse and repeat the best of our trades. That's what we're looking, the best setups which work for us. That is where we want to focus on, rather than just sort of, just flip-flopping, throughout markets. And I appreciate I might be labouring the point when it comes to intraday trading, but it's just because it's important, all right. And I want you to be able to be properly prepared and able to operate effectively in what is a very fast-paced environment. So we always set some rules and expectations. Risk management is absolutely key. Honor it. Okay, go back and watch the previous sessions on risk management if you're new to trading. Trust me, risk management is desperately important, okay, for all traders, but especially if you're going to engage in intraday markets. As we've just said, know what news is coming out for that session. Okay, it's important to know it. Do your analysis before you're trading, okay? And what I mean by that is spend a bit of time beforehand, sit down, do your analysis, do it with a clear head rather than when you're in the sort of the blood and fury of a let's say a fast-moving market. Resist the temptation to trade out of session. What do I mean by that? Well, as we'll show a slide later, most assets or most instruments have, preferable times to trade them. So, for example, let's say for those of you joining me here in like European times, okay, London in Europe, if you were trading the euro against the sterling, the best time to trade that is during the London trading session, okay, the European trading session. Trading that during the Asian session is likely to be, a little bit more challenging because the main protagonists, the Europeans and the UK sterling traders, they're in bed. Okay, they're in bed. So resist the temptation to trade out of session. Find the assets that suit that session on an intraday basis, because that's where you're more likely to have a little bit of joy. It might sound really kind of basic, but ensure you have a good internet connection if you're going to intraday trade, because you want to be able to operate effectively. Okay, and there's nothing worse than being sat in a big position, okay, on an intraday basis and then losing all of your internet connectivity. Okay, just make sure that you can do that and ensure you're rested and prepared for the session. All right, then that's actually crucial. If you've had a terrible night's sleep, or you've been up all night partying and then you're coming down at 7 a.m. to start your intraday trading, you're probably not putting yourself in the best place possible to trade at your best, and you owe it to yourself. So a lot of rules, expectations, all right, a little bit of guidelines that I can just suggest, but that's just come from years of my own experience. Just sharing with you, ladies and gentlemen, in order to give yourselves the best opportunity and the best chances to trade well. But when we look at most markets, and FX markets, is a good example of this. Generally, when we talk about there being kind of four major participants, all right. Some people might break it down more or less, but what we have is invariably the market makers, the dealers, the guys and the girls, okay, or the algos. All right, they're basically run the market in sense of making it an environment within which you can operate. Okay, so this will be mostly, certainly in the FX market, a lot of those particular big banks and a couple of the big funds, they're invariably they will be tasked with being effectively market makers, and they will have they will have guides and regulations which they must play by, but also they will also have benefits because of that. All right, and so as we grow as a trader, well, we want to start to understand them just a little bit better as a way and means to help us understand how markets move and operate. Then you can have like corporate accounts in the FX market. And I think sometimes people forget this, is, the FX market is there to facilitate international trade. We are speculators, the kind of the third bunch, but the reality is majority of it is set up to facilitate international trade. And so you will have, whether it be major funds or your major institutions, corporate companies, okay, I don't know, Ford Motor Company, which will have, a global supply chain and will have global exposure to all sorts of different risks, one of them being different FX risks, okay, across all of their suppliers across the globe. And so invariably they will have a very keen eye on the FX market and be very active players in that. But they're not necessarily doing it for profit. They're doing it to effectively as part of just running a good business, okay, being able to hedge and offset their risk. As I said, there are the speculators, small speculators like ourselves, major speculators, whether they be institutions, okay, whether they be funds, etc. And then finally, also the big boys of the central banks, right? And central banks, just running and effectively, hugely important to the running of all global markets, but very often FX markets as well. And so as traders, you will find that they are acutely interested in the commentary of the big major central bankers and also the data releases of the big central banks. All right, they will have huge impact across all asset classes, but that can have an impact on FX markets. And so you will see that as I said, those kind of four major types of market participants, within them there is a constant I was going to say sometimes it is a battle, but there is a constant to and fro. Okay, it's like it's like the ocean. Okay, just going through its emotions. Okay, going through it, doing its own business. All right, within that there is that, call it almost like a kaleidoscope of operators in there, of which you are just very one small part. And it's important to recognise and understand that. In particular, what we want to do is we want to understand, what dealers are doing, okay, how are market makers operating. Now, one of the very simplest ways that the dealers will operate and understand is that they understand that market moves are rarely one way, and dealers understand that the majority of the time intraday markets are range bound, okay, around about 80% of the time. So effectively 4 days out of 5, you're mostly going to be range bound. And if you were to look at the breakdown of an intraday market, okay, or look at just even take a daily candle and break it down into the intraday market, what you might find is that where it opens and where it closes is actually not too far different. There might actually be a huge amount of movement in between that, but they know that markets rarely move one way, okay, and they understand that the majority of the time intraday markets are range bound, and pick up on that, okay, just take that to heart. They also know that they're never to trust the first price. After a major news release, dealers know that the first price print is very often, it's the knee-jerk impulsive reaction of the market, and very often wrong. Not every time, but a lot of the time. They know this, okay? They know this, and they will utilize this to their own benefit. So if you can know how they're looking at markets, well, why wouldn't you look to utilize that kind of little bit of insight yourselves? So at a very simple level, what can we learn from that? Is that dealers, market makers, they're always fading a move, right? They're not necessarily looking to buy a trending move. They are looking to fade moves. These big, let's say in the FX market, mostly big banks, a couple of big funds, are effectively looking to ensure good continuous operations, are running within markets, and that they are liquid and operating efficiently. But as part of that, dealers are always fading a move. All right. And so if you want to be an effective intraday trader, I would suggest that you start to think a little bit like a dealer, and just always remember ABF, always be fading. And that will become more clear as we go into the sort of the into the slides and into the charts. But just be thinking about dealers are always fading move. ABF, always be fading. Okay, just take that on board as an intraday operator. So if we look to take that another level, all right, what is another level? What can we learn about those kind of operators from that? We have to recognize is that market makers, all right, they only make money when orders are triggered. Think about that. They only make money when orders are triggered. Okay, it's their job to make a market. Okay, it's their job to facilitate, effective liquid markets. Okay, and for all operators to be able to sort of enter and engage markets. So they only make money when orders are triggered. All right, when you're a big guy paying commissions and stuff, okay, on your trades, okay, that is that's what the deal, that's what the market makers are, that's where they're making their little bit of the crust. Okay, so if market makers are only making orders when they're triggered, it is in their interest, all right, it's in their interest to ensure that price goes towards where the biggest number of orders are sat. Hopefully that would make a little bit of common sense. They're a business, they're looking to make they're looking to make profit, so they're going to want to see and know and push price towards where the biggest number of orders are. And then the question becomes, well, hang on a minute, if that's what's going to happen, where do we believe that most of those orders are sat on an intraday basis? All right, where do we think that they're going to be? Where is that pool of orders going to be that that guys and girls are going to want to dip into? So thinking like a dealer means that we change our way of operating. And what I mean by that is we talked about, in longer term trading, swing trading, end of day position trading, etc. We tend to be trend followers. We look to be trend followers. We look to find a trend and find a way to get on board it and to ride that trend, as long as we can. Whereas on an intraday basis, we tend to be either a mean reversion or a reversal trader, because we're expecting markets might push out a little bit, but then they will come back in. All right, so they are, for the most part, they are range bound. All right, so on an intraday basis, and we want to utilize that information to be able to build ourselves a small intraday trading plan. So with that in mind, what can we do? How can we basically utilize that to sort of give ourselves a little bit of help? Well, one of the very simple things we can do is we can start to look at areas of interest, points of interest. Markets are still traded by humans. Yes, there'll be lots of algos operating in those markets, regardless of the asset classes. But as humans look on charts for usual places that to do their business. Okay, to either get out of a position or to get into a position. So these are things like big round numbers. Okay, so in gold, all right, we've seen 2000, all right, has been a big round number. Euro against the US dollar has been pivoting around about 110. There we see even like I think we've seen others like just knocking around pound against Canadian dollar, sort of like up at like 170, etc. Lots of these numbers, okay, running around, and just understanding those big round numbers, treble zero numbers in particular. Those are still of relevance and interest to us, and will become more so as we look at intraday charts, but also previous highs and lows. Previous highs and lows are very tradable opportunities. It might well be yesterday's previous high and low, last week's previous highest low, could be even last month, could even be last year. But for the most part, on intraday, going to focus on previous days and previous weeks, right? Especially on that intraday basis, because those previous days highs and lows, that is where operators have done their business. Okay, that is where either they've been getting into a market because they felt it was continuing, or they have been taken out of the market because that's where their stop losses were placed. It's where they had orders, all right, and that's where those orders were triggered, whether it be for profit, whether it be to enter, whether it be to be taken out on a stop loss. And so these things start to become very interesting and useful spots for us as areas to look for our own trading on an intraday basis. So, just as it says there, there's previous highs and lows that are tradable because there's usually lots of stops there. Okay, so there's a good chance that price will go there because that's where market makers make their most money. They become attractive for dealers. They offer points for a mean reversal trade, as in points as in a space that we can look to identify a trade, a deal setup for reversal trade. And what we'll do is we'll look at a few ideas, okay, and try to understand that a little bit better. So, I just put on lots of different charts, and what I'd be saying is, if you don't already, when you're just looking at intraday charts, is just looking at how does price react, okay, on the towards the previous days highs and lows. Okay, you can see here there was a reaction before it popped up, but then it came back, and then previous day's high actually became the support before it ran away. Then actually the next day, when we go into it, price comes down and just comes underneath the previous day's low, comes down underneath the previous day's low, then reverses, flies all the way up. And then it prints, a high during that day. The next day it comes back up, and the first time it comes up to it, it is rejected. Even the second time, okay, and the third time it comes before it's broken through. So, there is very often a real relationship between the previous day's highs and lows and how price will react to that. And this is where we start to combine things like price action, previous day's highs and lows, and intraday trading. We start to get these elements coming together that start to give us an idea of a place where we could be looking to do our business, to take a trade. So, of course, naturally we want to look at, it's all well and good, Paul, but how do we use that information? All right. Well, as an intraday FX trader, we want to, as I've said it several times already, we want to know what, if any, major news is being released. It's very important. We don't want to be stepping in front of it, but it might well be that after the news might pump its way to where previous days highs or lows. That is useful information for us. look for the previous day's highs and lows, okay? And also look at weekly highs and lows as well. They are useful. And any significant big round numbers, treble zero numbers in particular. Because when price reaches those areas, well, then we can look for very simple price action triggers to give us a mean reversion setup. So things like pin bar rejection candles, which, these ones here, okay, or engulfing candles or key reversal candles, okay, or you've got star formations and also double tops or bottoms, okay. And we'll just focus a little bit on double tops and bottoms today because we have done sessions, okay. We have done sessions on all of those, okay. You can find individual sessions on the Admirals YouTube channel about pin bars, engulfing candles, key reversals, star formations. So today we'll just talk a little bit about double tops and bottoms. So double top and bottom. As the name implies, all right, as the name implies, you've got a double top that looks like an M or a double bottom that generally looks like a W. Nice and simple. Let's not try and overcomplicate things. Why do we get interested in things like double tops and bottoms when we're seeing them at previous days' highs and lows? Well, in my much younger days, I used to play an awful lot of sport. One of the sports I played was rugby. And in many ways, when I look at how price reacts at previous days, highs and lows, I think it's like looking down on a rugby scrum, all right, from above. And what we're thinking is that price is the rugby ball that is being fought over and kicked about between the two opposing teams, the Bulls and the Bears, as they try and wrestle control of price of the ball from the opposition. At some point, okay, one team is likely to tie or is likely to make a mistake, and the price is likely to, the ball will get pinged out or taken control of by, normally the team in control, all right, but not always the team that puts it. In markets, okay, because price has already put in normally like a trend move or an overextended move to the previous day's high or low before the double top or bottom, we actually have a general that we're likely to anticipate there's a high probability of it to actually shoot out in the opposite direction as part of a reversal. And when we get price action that confirms that, that gives us the trigger to be able to look at, how to do our business. So, if you want a permanent reminder, okay, of double top bottom on your left palm, if you open it now, you'll probably see there, okay, on the creases, okay, in your hands and the wrinkles in your hand, you'll see there's a very perfectly formed, very nice double top there. So if you ever need a reminder when you're trying to look at what am I doing here, well, you've just got it there, right, and literally in the palm of your left hand, okay. So to have a look at that and just identify that double top or that M pattern in your own particular hand. And what we're looking to do when it comes to price action and intraday is that we talk about it a lot here, is that confluence of signals. All right, we're looking for some 2, 3, 4 things to come together at one time and place. So we were getting things like price action and its patterns. So you're getting things like double tops, okay, double bottoms, all right, and even within those double tops and bottoms, they might actually have price action setups. Maybe the second leg is a rejection candle or an engulfing candle or a key reversal candle. Has that happened at the previous day's high or low, or maybe has it happened at the big round number? We can also look at how has it basically moved from the Asian range. Okay, have we had a good move from the Asian range? So we've actually had accumulation, we've had manipulation, and now again ready for distribution. You can also use things like the indicators like the ATR, the average true range, which we'll cover in a future session. All right, about actually giving you an idea and understanding of how far the market has moved and how far that market could move during that intraday trading session. But the important thing is we want to see a confluence of events, 2, 3, 4 things coming together, one time, place. That's what gives us, the self-confidence and the belief to take that trade. And as I said a bit earlier, it's better for us to trade in particular time windows, okay, in specific better time windows. So not unsurprisingly, we have here, okay, sort of from about 6 o'clock onwards, at 6 o'clock in the morning through till sort of midday and then into the afternoon. That's not surprising. When you're looking at that kind of London time, it's no surprise that basically things like sterling, euro, etc., Swiss franc, all European currencies, they tend to do most of their trading during that period. In the same way, all right, that, you have, Asian currencies like the Japanese yen and the Australian dollar. Well, not unsurprisingly, they do their best, their biggest move during the Asian session, okay, which is between the end of the New York session and the start of the London session. And so, as I say, if you're going to be intraday trading, it's better to focus on FX pairs, or even the indices that are actually relevant in that suitable time window, rather than trying to trade outside of your time window. And what we particularly look, as I said, I've just got a few examples here. This is a 5-minute chart, okay, in the Kiwi dollar. Kiwi dollar, so it would be Asian session that would be ideal, all right, and that's what we have here. And what you might be able to see on my charts here is that I have an indicator that prints the previous day's highs and previous days and highs, highs and lows, and weeks highs and lows. You can find that, you'll be able to find them on for both MT4 and MT5. They're pretty ubiquitous, but we can see here this blue line was yesterday's high. It was also, this blue line was previous week's high. We can see that in the previous session the market had respected that, and then in this particular time, what we saw, price moved up here, didn't it, towards this area, and it put in a double top at the previous days and the previous week's high. Also, the second leg, okay, was a rejection candle, a pin bar, and we can see that is effectively what we saw, as price pushed up to the edge of the range of where it had been yesterday, and then it traded all the way back in, and then it was effectively captured by the 200 period moving average. And that, ladies and gentlemen, is a very nice, very simple trade, okay? Very nice, simple trade. We're looking for areas, at the edges of the range. Price pushes up there, price pushes, in, and we have a confluence of events. We've got a double top with a price action pin bar, during the best time, at the previous week's high, the previous week's, yesterday's high, and the previous week's high. Confluence of events. It's like the scrum. The battle has gone on there between the bears and the bulls. We know the bulls, had it control here, and we're expecting it to reverse. We're expecting the higher probability is that the price will, drift its way down, and we're ready to take, part of that. And when you're trading double tops and bottoms, to begin with, it's actually this 0.2, right there, the M pattern there, that 0.2, when the price breaks that is a fabulous place to get your entry into your trade with your stop above the highs of the double top. Just keep it simple. Don't to begin with. You don't need to try and make too much to be to try and be a rock star. With that in mind, also, we've got things like big round numbers. This was from a while back. This was the pound against the US dollar. Actually, what we have here, this is big treble zero, 120. And this grey box is the Asian session. And what actually happened is, price came out of it. And basically what we did was, excuse my drawing, what did we do there? We put in a double bottom there, okay, a W pattern there at the big round number, all right, at the big round number before price basically popped higher, didn't it? Came back, compression, expansion, retracement before the next expansion, okay? And that's what we're just looking for there. Prices come out to the edges, of the Asian range, which is also where that big round number is, and then it's put in that double bottom there, okay, before price moved. And that's just a really nice, simple way to be able to operate. This is pound against Swiss franc, and the reason we want to have a quick look at this is because what I've got here is the green boxes tend to be, on my charts, they tend to be the majority of the sort of the opening of the US session. And then what we have is the tight grey box. Well, that's the Asian session. For me, that's the overnight session, okay? That's the overnight session, a specific session, the Asian session. And actually what happened is price broke out of it, okay, during this day. And then what did it do? It put in a double bottom, having broken out of that, and then basically traded all the way up. And where did it trade up to? It traded all the way up to the previous day's high, okay? The previous day's high got up to there. What did it do? It printed a price action rejection candle as a pin bar. A pin bar, which in its way also became a bit of a double top there, and it tapped it again before basically price dropped its way all the way down there, right? And that's just sitting, watching, identifying, as I said, identifying the previous day's highs and lows, identifying the kind of edges of ranges, and looking at once price gets there, how does it react? Okay, how does it react? Does it print things like double tops or bottoms? Does it print like price action rejections at those significant levels? Because that is, that is a simple way to operate as an intraday price action trader. Just another example, pound against Canadian dollar. You can probably tell that I trade a lot of sterling. This was here. look at this, we're at 160, big treble zero numbers, the 1 hour chart. And actually what we've been a little bit of a down move, and we had the overnight Asian session. We came down to the edge of it at the big round number of 160. What did we do? We printed, a rejection, a bullish pin bar there. Okay, a nice bullish pin bar before price basically shot its way up there. Okay, shot its way up there, and went all the way up for a good while from there. But that is, confluence of events, 2, 3, 4 things coming together one time and place that give us the indication of this is where we're looking to do our business, to do our trading. So before we switch across to the live markets, okay, your task from today's session, I always like to say a little bit of homework, ladies and gentlemen, that you can take away and work with is go away and open any chart on any intraday timescale, 5, 15 minutes, 30 minutes, even 60 minutes. Draw forward, okay, the previous day's highs and lows. If you haven't got an indicator, and even if you have the indicator, try it for the first few days of just drawing it in there, okay, just to get your eye in, just to get you recognizing, drawing any significant big round numbers, treble zero numbers, and then look at what happens when price reaches those levels. All right, does price power on through, which you might do, which is actually giving an indication that the trend is very strong and it's likely to continue, or does it reverse? Okay, does it start printing things like double tops or bottoms? Does it start printing things like rejection candles, like pin bars, engulfing candles, key reversal formations? Maybe it puts in a star formation. Does it print those and trade back into the range from where it comes? And as I said, if it reverses, were there any significant price action signals there to alert you to a trade? So Osman says, what do you think about order books and liquidity for intraday analysis of price action? Thank you, and nice talk, Paul. And yeah, they all have they can all have a benefit to you, isn't it? Order blocks can be enormously helpful. They can help. My view is that I personally think order blocks have more strength on higher time frames. Okay, so you're looking at daily, etc., 4 hourly, weekly. They're much more stronger, but they do have a relevance to intraday trading. And in terms of liquidity, well, as I said, part of that liquidity is looking at things like previous days highs and lows. That liquidity is because there are orders there, and if there are orders there, that is where market makers, is where the dealers are going to want to bully price towards. They're going to go and move towards that, because if you only remember one thing, market makers only get paid when orders get triggered. Okay, so they're always going to be looking to go to see where they can trigger the most particular orders. So I hope that helps you, Osman. So to conclude, all right, price action analysis is a way of analyzing market using purely price action over time. And we are always looking for price action triggers at significant price levels, prices, or zones. And that allows us to build just quite a simple price action trading plan. Trading intraday with price action is possible, as we've just seen there. You just have to always be aware of impending news announcements. Always make that very, very clear. We feel as the market makers and dealers will know that 80% of the time, intraday FX markets are practically range bound. So with that in mind, we want to learn how to trade reversals and mean reversion setups, in particular, when we see them reacting around things like previous days, highs and lows. Also, it can be around big round numbers, big treble zero numbers. So just make sure you're aware of them, and they are good areas to find a good, suitable trade setup. So we've got a couple of minutes left, so let's have a little look at them on live markets. So before we do, right, just remember to join us here on the next session, which is next Wednesday, 3rd of May, where we're going to be at session 31, and we'll look at price action on FX markets. So we'll be looking at that more on the kind of the swing and the intraday, swing at the end of day, but it still has an impact, just being able to recognize that. And we'll look at, well, what FX market should we focus on, what time frame should we focus on, and what tactics work best. So that's 2 p.m. London time next Wednesday, 3rd of May. Check your inbox for the webinar link, or head over to the website and be sure to sign up for that. And as always, if you've got any questions or comments or feedback or elements you'd like me to look at focusing on, then by all means you can get in touch with us there. Okay, you can see there the email address, and as I said, this session and all the others, they will be on the Admirals YouTube channel and also on the Admirals Facebook channel as well. So just bear with us a minute. I said for a minute or two, we'll just switch across to the live chart, just the last minute or two, have a quick little bit of look at what's going on there, and then we can take it from there. So just bear with me a moment and we'll switch across. Okie dokie. Okay, so yeah, we're just here at the sort of live charts here, okay, intraday charts, and I was looking at here. We've had just a little bit of afternoon action here. Okay, just moving on. I have been looking at the, this is just most of the sterling areas, the sterling points. We've actually clearly had some news this afternoon, which has given sterling a bit of a nice bit of a bump. But even today, I was looking at pound against the Swiss franc here. So pound against Swiss franc, we came out of the Asian session, all right, and we pushed our way up here, and we pushed our way up to yesterday's high, but just a little bit further to it, to this kind of like 111 area, which if I just zoom out here, the kind of 111 area has been very, very significant support and resistance, okay, on the daily chart. And we were looking to see how price got up to what it was going to do when it got into that area, got up there, and it basically printed a rejection candle there, and then it's just continued to work its way down and drop its way down, okay, after we've pushed out and we've come back down. So as we were saying, is that price action is, or rather intraday markets can be very often, even with big swings, big moves, they can be effectively most of the time mostly range bound, right, and just into the way that they in the way they operate. So we've had a couple of bit of ideas about the sterling. I had been looking here earlier today about the pound against Canadian dollar, and that we had run up to the big round number here. Okay, we had run up to the big round number at 170. Okay, I was interested to see how it operated, and it looked like it was going to reverse there, didn't it? It looked like it was printing a big bearish engulfing, but we had news this afternoon which has just pumped that through. I think there's this Canadian news this afternoon, I think, yeah. So that will have just had that impact and basically pushing that up. But as I said, if we look at that, okay, in terms of what happened when we got up to that big round number, price does that, and it does have a bit of a move down there. Okay, a good couple of about 90-minute move down, but then it's getting ready for the news, and you can see that this is why you want to be aware of what news is coming out. Okay, you don't want to be trading just in front of that news, because you can get caught on that way. It's why we just want to know where the big news announcements are coming out, but also how does price react at significant particular levels and such on that. If you look at even pound yen, look at pound yen for yesterday, right? So this is a 30-minute chart here, and I've got previous week's high and the previous day's high here on the charts, and just looking at yesterday's session, in the overnight, the Asian session, we pushed up, okay? We pushed up to what was the previous week's high, okay? The previous week's high that before we put in let me clear this down. This was like an evening star formation off it, and then basically ran all the way down for the day. But where did we finish yesterday for pound against the yen? Well, we finished at the previous week's low here. What did we finish with? Well, we finished with a pin bar yesterday that became also a double bottom there. Okay, you might even say actually became a bit of a triple bottom, depending upon your definition, and then price basically moved out and away from there, so back up to about 50% of the range of the previous day. So as I said, we're always interested to see previous yesterday's highs and lows, because when we see price at those areas, we want to see how does price react. And very often, not every time, but very often, when you get a confluence of events, you're getting confirmation, okay, from price action at those areas, that's normally when we will expect a significant move away from that back in towards the middle of the range. And by understanding that, well, then that actually becomes the basis of a way that we can operate on an intraday market level, just looking to be able to trade from and away from those particular means and areas. Unfortunately, as always, we've just run out of time there. I want to do a little bit more on that, but time flies when you're having fun, ladies and gentlemen. I wanted to try and get as much as always into these sessions to share with you as possible. I appreciate that, it's recorded, so if you need to go back, in a couple of days' time, it'll be on the Admirals YouTube channel, so be sure to go back in, watch it again. You can watch it at the speed that suits you, okay, and pick up there. There's an awful lot of useful information in there for intraday trading and combining it with price action, and hopefully you'll be able to take that away and utilize it in your own trading. As I said, next week's session we'll be looking at, focusing on price action in the FX markets, what we need to be aware of that we can utilize in our own trading. And until such time, I wish you the best of success in your own trading, ladies and gentlemen. Hope you have a fabulous, rest of the week, and I'll speak to you soon. Trade well, everybody. Cheers.